On Monday, it fell by $140 an ounce. That's a 9% drop. It's the biggest one-day decline in more than 30 years and left gold trading at $1,361 an ounce. Now, while such a steep drop in one day is pretty dramatic, gold has been in decline since hitting a peak of around $1,800 an ounce in September of last year. But as you can see, there was the big shift out of gold in the last 48 hours, and it does, some would say, reflect a stronger outlook for the global economy, perhaps.
Gold has plunged to its weakest in 2 years. Investors are ditching it on fears of central banks like Cyprus and maybe other weak Eurozone economies selling some of their reserves. In addition, larger countries in the region could look to cash in on huge rises by gold over the last decade. From the start of the year, the price is down $300. On Friday, a 5% slide pushed it below $1,500 an ounce. Monday, the sell-off accelerated. The feeling among gold bugs is that central banks could halt their stimulus measures this year, and that would cut gold's appeal as a hedge against inflation. Silver prices are also on the slide.
Well, clearly gold was never really a safe haven status in the way that the markets had portrayed. Investors that had bought gold years back bought so then. The trade more recently has been very crowded. It's been more trading, more speculative orientated. It's fast money. The China data was interesting data. That was really the trigger for the sell-off. And look, people just don't want to use gold in the way it's traditionally been used. It's being used now as a provider of liquidity. Things go wrong, people sell their gold, and then they use the cash proceeds to invest elsewhere. That can be a negative scenario or a positive scenario.
What do you think, Marcus? Does that sound right to you, that it never really had a safe haven status?
No, not at all. I think just because some speculative traders are washed out in a big futures trade in New York over the weekend, that doesn't change 6,000 years of history and hundreds of years of gold as both a liquidity source, a source of insurance, and a source of a safe haven in bad times. I think all of those things are still true about gold. I think this particular correction has been engineered by one particular large transaction that went through, about $20 billion over the weekend, 400-ton short position in the futures market. A lot of the investors I talk to still see a very fragile economic recovery. They still see gold as an essential asset to have to protect wealth.